Welcome to the daily snapshot video update. This is being prepared Friday, March 25th, where I'll briefly go over what happened in the markets and then see how things look for Monday, March 28th. Incidentally, if you already ran across this video a little while ago, this is take two. I recorded and posted a video, but I forgot to turn off a fan in the background, which I didn't even notice while I was recording, but sounds like a hurricane when I go to listen to the video itself. So this is supposedly a little better quality audio. So let's go back over what happened on Friday. It was a pretty wild roller coaster session, and it looked like we were starting out pretty good. We had a higher open. We were able to actually get above R1, which is usually pretty positive, and prices were kind of inching their way higher. Then all of a sudden, there was a pretty big decline, and we actually went negative, and we went all the way down to the daily pivot. The only thing that I could see is that there's a lot of algorithms out there in program trading, people that are not humans that actually look over the whole market landscape at any given time. And once they saw yields going up pretty fast, that sent a negative wave into the stock market that said sell, and that pushed prices down. What's interesting is we went all the way down to the daily pivot, and that's where things stopped. And we were able to rebound back from that and get back up to R1. Then there was a little bit more selling that happened as the day went on, and we went all the way down to the unchanged level. Again, another support level on a positive day, which can also serve as resistance on a negative day. As we got closer to the close, there was some late day buying, and it took us back to the previous high that we set right after the open. So we closed right about at the high, not quite, but right about at the high for the session. We ended up being up 0.51% for the session. One thing that's a little bit concerning is every day this week, no matter if it was an up day or a down day, we are seeing below average volume, and it's declining each consecutive day. I'm not sure quite what to make of that. Usually when we see a declining volume, we suspect the move in that direction. Well, we had both up days and down days this past week with declining volume. All right, so technically we're still looking pretty positive. The markets are also coming to the end of earnings season. We're dealing a lot with inflation and interest rates, as well as the different geopolitical concerns. So some notes that we can take on Friday's session are that we're out of correction territory still. We're down a little bit more than 5% from the all-time high. The technicals are positive and improving, and we're just underneath the 100-period simple moving average. That's kind of the overhead resistance right now. Prices are still in a range, and if we keep going higher, we're going to get back to that previous short-term double top that it looked like we were recovering a few weeks ago, and then we kind of went solidly down after that. So that could be a pretty significant high that we want to take out. We still have the situation between Russia and Ukraine, and that seems to change all the time. Sometimes it's a little bit more positive news. Other times it's more negative news. Of course, inflation is an unfolding story, as are interest rates. And then China, they still have a lot of lockdowns in China. And what is that going to do to the supply chain issues that we're already facing? On Friday, we had consumer sentiment come out, the final report, and it shows that most people are still pretty negative about things. It didn't change much from the preliminary report, but it just shows that people are just not happy right now. Looking at the S&P 500 by itself, we are still overvalued. But when you compare it to what's happening in the bond market, we are more fairly valued. The trend right now is positive and weakening. Right before this, we had a strong trend that was negative. So now that things are starting to shift, the ADX is picking up that shift. And so we're seeing a weakening trend right now. Because of the up day, the bias was positive, and pretty much for the whole week, even though we had some down days, the momentum is also positive overall. So looking at the daily chart, this is the resistance that we were able to close above. And this looks good, not only on a daily chart, but it also helps the weekly chart look a little better as well. Now, the next area above is, this is where this double top was a few weeks ago. We also have a resistance level above where current prices are at. Are we going to continue to go higher, or are we going to fall down from here? Because we're also showing some overbought indications as well. As far as our trend, here's the ADX, where the green line is on top and the red line is on bottom, but overall, we are seeing the ADX decline. There still is a trend, but it is a weakening trend right now. Then looking at our rune, it's much more positive. We spiked up earlier in the week, fell back a little bit. Well, we spiked up again with the higher move on Friday. When you look at the oscillator to compare both of these signals, it has crossed over and is positive and saw a little bit of an advance on Friday. This is the volume situation, at least for the S&P 500 that I'm talking about. We started out on Monday below average and have been trailing off in volume ever since then. Then looking at our moving averages here, we're coming right up to the 100-day moving average. We've been able to get above all of the other moving averages, at least that I plot on this chart, but now we're looking at the 100 as being possible resistance. Then here's the 100 in isolation itself. We were able to get above the 200 EMA, the 100 EMA, but now we're seeing, can we get back above the 100 SMA? Our rainbow also shows us coming back up through the moving averages with overhead resistance right now. Then on a longer term basis, we are above the 200-day moving average. And so every day that we're above that moving average makes the long-term trend more and more positive. Every day we're below it makes the long-term trend more negative. But the line itself, even though it's really hard to see, it's rolling over just a little bit. If we can stay above that 200-day moving average, things will stay more positive long-term. So what's our outlook for Monday? This is pretty much a cut and paste of what I've been saying. The S&P is still out of correction territory. We're still in an intermediate term range right now. If prices continue to go up, we have that short-term double top to deal with. We're getting near the end of earnings season, and there's this constant battle between growth and value. The economic reports that are coming out on Monday are not necessarily market moving. We just can look at them and then place them into the overall economic picture. And then the geopolitical events, Russia, Ukraine, China, and then the NATO meetings are pretty much ended now. And the president is either going back to the US or has already returned to the US at this point. So what are the different scenarios? If we're looking for the market to go down, one thing that we might use to rationalize this is, will we revert to the previous trend? This is what was the trend before the Fed made their announcement, before we started coming up out of that base. The longer that we stay away from that, the less relevant it becomes. The idea is that we're going to bounce just long enough to wear off any extreme pessimism that we were experiencing while at that base, and then get set to go lower. Now, I think a much more likely scenario is scenario B, which is where we have a lot of indicators that are giving us overbought readings right now. And we also have resistance above where prices currently are at. Okay, that's the negative side. Now let's look at the positive side, or going up. We are coming out of a base. Our oscillators are positive. Our moving averages are providing support if we fall back, but they're also providing resistance if we're trying to go higher. And this past week, we were able to exceed the previous high set earlier in the week. And that just helps to make the chart look a little more positive. The least likely scenario at this point is sideways, but we have to keep an eye on that. If the ADX keeps dropping and gets below 20, and we start to see price movement really slow down, instead of the 1, 2, 3% up and down moves, we might get 0.5 to 0.75% move one way or the other. That would show that things are really slowing down and we're getting more into a trendless environment. So we want to keep all three of these things in mind at the same time. So what is our conclusion? The S&P right now is positive, yet is in a range. On a short-term basis, it's positive, but we are seeing some overbought indications, and we also have resistance. Intermediate term, we are positive. Our oscillators continue to be positive, and the moving averages are providing either support below current prices as well as resistance above current prices. And then in the long term, we are above the 200-day simple moving average, which is more positive for right now. So thank you for paying attention to this snapshot video update. Please watch the longer version of the daily video update if you want to hear me go into more detail about how things are going right now.